You really need to see this before tomorrow morning, because tomorrow morning we are going to get CPI, and some people are speculating that CPI was actually leaked today. Here in this video, we will break down expectations for CPI from all of your major banks that post their CPI expectations and what some individuals are saying about CPI and how that could affect our markets. And as always, we will go over everything you need to know in specific regards to Tesla, including how tomorrow could affect Tesla stock. First and foremost, it's worth mentioning the S&P 500 was up 0.98% today. Call it around 1%. The entire week's expected move this week was about 1.5%. So you did this the day before CPI. I see why a lot of people are saying CPI was leaked. And I think Sven Hendrick on X says it well. First they eliminated down quarters, then they eliminated down months, then they eliminated down weeks, and now they have eliminated down days. And it certainly feels that way, as the S&P 500 has now been up 1, 2, 3, 4, 5, 6, 7 days in a row, and if CPI comes in good tomorrow, that could mean many more green days. In fact, this is now the highest the RSI has been throughout this past year. Currently, the RSI on the S&P is at 81.97, which is just getting to ultra extreme levels. For any of my folks that like mathematics, you are more than 2 standard deviations higher than your 20-day moving average. You're above this top end Bollinger Band now by almost half of 1%, which is just way extreme. It's also being reported that net bullish positioning in equity futures among asset managers and leveraged funds has touched the highest level in a decade, according to JPMorgan. First and foremost, CPI comes out at 8:30 in the morning Eastern Standard Time tomorrow. Nick Timmerhouse, as always, put out this chart of your major banks that put out CPI targets or estimates, and wow. So you're expecting a median forecast of 0.22%. Now, actually, since this was posted on July 8th at 5 p.m., it's now July 10th, you have actually seen the median forecast go down to about 0.21%. But we have the estimates here. Bank of America is expecting 0.24, Barclays 0.22, PNB Paribas is 0.22, Citigroup is 0.17, Deutsche Bank 0.25, Goldman Sachs 0.21, Morgan Stanley 0.27, Nomura 0.14, TD Securities 0.18, UBS at 0.16, and it looks like out of these major banks, Barclays tends to be the most accurate. And Barclays is expecting core CPI at 0.22%. And if we take a look at what Fundstrat just said today, they say if June core CPI is below 0.25%, this likely triggers rotations in small caps, industrials, financials, and laggard FANGs. Our base case remains that July is a positive month for stocks, supported by softening inflation picture and by the still lingering skepticism towards stocks. And you can see here via this chart, April and May CPI came in better than expected. Now, for last month specifically, that was a great CPI report. You were expecting 0.30%. You came in at 0.16%. So even this month's number of expecting 0.21% is a little bit higher than last month's. But take a look at some of these returns. The S&P 500, 1 day later after the April CPI was up 1.2%, and 1 day later after May's CPI report was up almost 1%. 5 days later, you were both up almost 2% for May and up 1.1% for April. But the last bad CPI report we had, which was in March, you were down about 1% the day of CPI, and then 5 days later, you were down 3.6%. In fact, if the actual CPI estimate for core month over month is between 0.1 and 0.22%, that means the only banks that are higher is Bank of America at 0.24%, Deutsche Bank is 0.25%, and Morgan Stanley at 0.27%. So odds are pretty good. We come in lower than what Fundstrat suggests would give us a positive reaction in the markets of 0.25%. In fact, Citigroup, Barclays, PNB Paribas, Goldman Sachs, Namira, TD Securities, and UBS believe we're going to come in low. And JPMorgan came out with their scenarios for CPI and what that could do to markets. And they say there's basically an 82.5% chance the markets will move higher. And these are the specifics. So if CPI comes in below 0.1%, 0.10%, there's a 2.5% probability of that. The S&P 500 would gain 1 to 1.75%. Between 0.10 and 0.15%, JPMorgan thinks there's a 15% probability of that, and the markets would gain 1 to 1.5%. Between 0.15 and 0.20%, there's about a 35% chance of that, and the markets gain 0.5% to 1%, which is pretty much what happened today, and that's what JPMorgan said is most likely to happen. Between 0.20 and 0.25%, that's a 30% probability, markets would gain 0.25% to 0.75%. And between 0.25 to 0.30%, a 15% chance, markets would be down 0.75 to 1.25% tomorrow. And above 0.3%, markets would be down 1.25 to 2.5% with a 2.5% probability. So even in JPMorgan's most likely scenario, that 35% probability scenario, they expected the markets would go up 0.5% to 1%, and you went up almost exactly 1% today. I see again why people think the CPI report was leaked. And if you want my honest opinion, it probably was leaked. Big money probably always gets CPI reports before they are actually released to the public. The question is, does this make markets fall coming tomorrow or not? And I think that's a difficult thing to answer. The only thing that I can definitively say is markets are stretched to all hell. You are overbought in a way that you have not been in, years, I believe? I don't think the RSI has been this high in literally years on the S&P. No, you have to go back to pre-Roni Rona, back in 2018 when the RSI was sitting at 87 on the S&P 500. So whenever you get to these extreme levels of being overbought, it does tend to lead to a correction. Now, last time the S&P was this overbought, he got a little bit more than a correction. The S&P actually ended up falling about 12% towards the beginning of 2018, and it did spark overall more volatility. Now, is that coming again? I do not know, but I think your odds are pretty high that you actually do fall in the next couple of days. And just like we rallied off of a bad CPI report a couple of CPI reports ago, the markets did end up coming back. I think it could be to some degree the opposite this time around. Perhaps you've priced in a good CPI report, and it wouldn't surprise me if markets are marginally down even on a good report, at least a report that comes in line with expectations. And the divergence continues to grow, with the equal weighted S&P only up 3.83% this year, and the market cap weighted S&P up over 17%. At the same time, the Russell 2000 is only up 1.2% this year. And it is being reported the infamous Warren Buffett indicator has officially hit 195%, which is the highest in history, higher than the dot-com bubble, global financial crisis, and the 2022 COVID crash. And last week saw the 5th largest weekly inflow to U.S. stocks since 2008. Single stock inflows hit a new weekly record high per Bank of America. And Isabel Net on X says the percent of S&P 500 stocks above their 20-day moving average is showing signs of a bearish divergence, which can be an early warning signal of a potential market correction. And this is when you actually have stocks that are declining, right, that are breaking under their 200-day moving average. At the same time, markets just continue to go higher. Normally, when you get this divergence, you do tend to see a fall. And the S&P 500 has now hit the 78.6% extension off the March 2020 low, which is one of the last Fibonacci levels. And it is being reported as well that equity put-to-call ratios dropped to the lowest level in 12 months, which basically just means the call trade is crowded at this point. People are not fearful. They're not protecting for downside. None of that. And that's one of the more interesting things about today. The Dow was up 1.09%, S&P up 1.02%, the NASDAQ up 1.18%, even the Russell was up 1.1%, but the VIX was also up 2.72%. So there was some put activity today. Nick Timmerhouse writes on X, it didn't move markets. It was, quote, boring, in the words of one lawmaker. But the Fed chair's testimony on Capitol Hill this week laid the groundwork for rate cuts using what may turn out to be a more durable footing than the one that collapsed in April. And one thing that Powell said today during his testimony that really stuck out to me was this. Powell, the number one thing that does keep me awake at night is avoiding a serious downturn while bringing inflation down. Quote, I'm trying to make decisions that give that the best chance to happen that is the thing that I think about in the wee hours. Basically saying he's scared or concerned about causing too much economic pain. And that may be one reason why markets did outperform today. Powell was asked that question, specifically, what is he most concerned about? Normally, he responds with cybersecurity because we've dealt with banking crises, we've dealt with a pandemic, we've dealt with this and that, but never cybersecurity. And he did say cybersecurity is something he worries about, but he added on what I just mentioned and said, you know, that not causing the economy too much of, a slowdown is what he's thinking about now. And that was just totally different than what we've heard before. Remember the news that I went over earlier in the video that came out today that says longtime investor Bill Gross, Tesla, quote, is acting like a meme stock, sagging fundamentals, straight up price action, but there seems to be a new meme stock every other day now. Most are pump and dumps. Elon Musk responds and says Bill Gross is used to making investment decisions by looking in the rearview mirror, which is fine for bonds, but he does not understand technology, as that requires looking through the front windscreen. Which really, who cares what Bill Gross says anyways? Seems like a very interesting individual if you wanted to read up on some of the reporting from Bill Gross and his divorce procedures, including this is the guy that left a dead fish in the air vent for months and basically trashed him and his wife's mansion in California. Just kind of a very strange individual to begin with. A final look at the option activity today. Tesla had 30 different interesting, unusual trades from big money today, totaling $20.03 million with a positive order value of 94%. So it seems like big money, very bullish on Tesla here. Tesla was up 0.35% today in regular trading at the time of recording this video, down about 0.25%. And today was Tesla's 11th straight day in the green. So if we get a really good CPI report tomorrow, Tesla could break the all-time record, which from my knowledge is 13 green days in a row here in not so distant future. As bar chart says on X, greed returns to the stock market for the first time since May 22nd. We finally did it, which is just crazy. This whole time you have been either neutral or in fear territory for CNN's Fear and Greed Index. At the same time, the markets just continued to make new all-time highs. That's mainly because of the divergences, the breadth that has been really bad in this market. And the odds are really good here that we do see a corrective rotation where maybe big tech falls, small caps as Tom Lee said, industrials, financials, maybe start to catch a bid, or you just see a normal correction where kind of everything sells off. At this point, I do think the S&P 500 has priced in good inflation. I think it's priced in a decent economy. I think it's priced in really good earnings, and I don't think there's too many upside surprises really left at this point. Could markets go higher? Obviously. We are in the summertime low liquidity, just melt up period. That just means we don't have a lot of trading activity right now. There's not a lot of selling going on, and the buying is taking precedence because it's the path of least resistance, and that's what markets like to do. Until we do get a bad CPI report, until we get into big tech earnings, I'm not expecting much of a drop here. But I do think there is a greater chance that markets do fall on an inline CPI report coming out tomorrow, which is, I think, what we're going to get. I think we're going to get an inline CPI report that causes stocks to fall 1/4 to 1/2%. That would be my expectation. I'm not expecting some kind of large rally tomorrow. I'm not expecting some kind of big fall tomorrow either. But I do think earnings season in and of itself is probably going to give us that 10% correction. So be on the lookout for that. As far as Tesla specifically, I think there's so many different things going right for Tesla. The business starting to trough, get better. We're looking at interest rate cuts that start in just over 2 months here. Tesla's Robotaxi Day on August 8th could actually give us, a start date for the Robotaxi network. And all of these things are, I don't believe, priced into Tesla stock, especially not Tesla's AI prospects. And again, at some point, the markets will start to pay attention to what companies are actually deploying AI, what companies are bringing in actual dollars from AI. And Tesla's really 1-1 in that, metric. There's a lot of speculation that Apple introducing, AI features will sell more iPhones. There's a lot of speculation that Google and Amazon and Microsoft are going to be very successful in AI. There were reports out today that price targets are being raised on Meta because they think Meta is going to become even more profitable because of AI. None of that is proven. None of that is realistic in the short term. Longer term, of course, but not in the short term. In the short term, who's actually deploying AI? That is Tesla. And I think August 8th is going to give us a whole new reason to be excited for Tesla stock. So I do think if we get a correction, it doesn't necessarily have to be, a correction where everything kind of sells off. I think it can be a rotational correction. And I think there will be pockets, areas, or stocks in this market that will continue to perform, aka Tesla. I mean, after all, you're still down like 40% from all-time highs. So relative to Apple, Amazon, Google, Microsoft, there's still a lot of runway left in Tesla. So let me know what you think about this information down below in the comment section. Again, the theory behind why I think markets fall tomorrow or why I think we're due for a correction really comes down to good news is priced in, markets are overextended, and that's the chunk of it. I also think AI expectations are way too high in the short term. I think there will be disappointments from the hyperscalers, the companies that I just mentioned, and we're not going to be impressed by those AI returns. After all, what's your ROI if you're spending billions of dollars on these NVIDIA products and bringing in a handful of millions of dollars from it? So for these reasons, I'm a little defensive right now. I'm not going to lie to you guys. A little defensive. Am I concerned? Am I positioned for this market? Of course, right? Little concerned, I will say, but I am fully positioned for this market. Fully positioned for this market. Yes, I do have some puts as protection, but either way this thing goes, I'll do just fine. And I think that's the best way to position yourself. If you're all in, maybe it is time to take a little bit of defense out in your portfolio. Maybe that is trim some big tech, buy some other areas that have underperformed. Maybe that is buying a put or two. Maybe that is using some credit options. Maybe some bonds might make sense, especially if you think the economy is going to worsen. Even, selling a call, right? That can also make some sense as well. There's a lot of different ways to hedge some downside risk, but I do think right now you probably want to start thinking about, at the bare minimum, some downside protection, taking some profits, and maybe limiting your exposure to the areas that have really outperformed. This is a historical market in terms of big tech outperformance compared to average stocks. It's a very historical moment in terms of the economy getting worse and markets just continuing to chug along. Typically, that does not happen, but it's happening. And it seems like every day we're breaking a new historical precedence. It's not exactly the markets I want to be balls to the walls in and have no downside protection. Take no profits. Sorry, that's not going to be me, and I'm not going to sell you a false dream in that regard. So let me know what you think about this down below in the comment section. Again, just to be clear, I still think Tesla's hitting all-time highs by October, and really, none of this has too much of an impact to Tesla at all, just given Tesla has major events coming August 8th, and you're not even close to as overextended on a relative basis as you are in big tech. Tesla's still like 35-40% off of all-time highs. So again, let me know what you think about this down below in the comment section. Hit the like button and subscribe to the channel if you have not done so already. You guys have a fantastic rest of your day, and I will see you in the next one.